everyone. Right now, there's a lot of indirect signals in the market. You got to play it smooth. You got to be patient. When things get more to the extremes, at the lows, at the tops, that's when you could be a bit more direct. But right now, you got to just play it smooth. You got to see which way the tides are going to be moving. The VIX is holding 30. The Russell 2000, it's reclaiming a downtrend level. So there's a lot of interesting signals right now in the market. It's our job to remain afloat. So in today's video, we're going to take a look at all those things. We're going to take a look at the SP 500, the NASDAQ, large tech stocks, and the VIX. All right, so without further ado, let's get started with the video. All right, guys, so number one, this is a daily chart of the Russell 2000 futures. And what we did a very long time ago was back in November of 2024 was I created a trend line, which was this essentially the highs that were just being hugged on this trend line. And as we continued to extend it, in January of 2025, this actually acted as support, and then it acted as support again during March. So now once again, we are at this very, very important trend line that has been prevalent for a very long time now. So we have just closed above it 2 days in a row. Now, generally when that occurs is, yes, we got a nice pullback. We got a pullback below the trend line, obviously, right? We got 2 closes above the trend line. Now, as long as this level holds on the Russell above essentially 1840, 1830, this can act as a level of support and continue rising now. Because if we look at, so the Russell has obviously been acting as the biggest loser. If we look at the NASDAQ, for example, or the SP 500, we can clearly see the NASDAQ and the SP 500 on daily charts are much, much stronger than the Russell. So because the Russell has now regained this trend line, and because the NASDAQ and the S&P 500 are really just continuing to show some strength, the strength in the NASDAQ and the strength in the S&P 500 can help permeate into the Russell 2000, essentially, is what my thought process is. Now, one of the things that is going to be a bit of a nuisance for the market to continue rising up is the VIX. So now the VIX is very, very important to monitor. We monitor the VIX because it has a very inverse relationship to the market. If the VIX rises, then that is bearish for the overall market. And we could see right now the VIX is really, really trying its hardest to hold above this $30 level. We had a low of 29, and we could see that this coincided very, very perfectly with prior levels of support. So as long as the VIX is essentially holding 27 to 28 as support, it means that it could bounce. And if the VIX bounces, that is generally bearish for the overall market. Now, this is something that we need to take into consideration in terms of being extremely bullish. But in general, this is just one of the factors of why we could get a bit of a pullback is the VIX, right? But there are a lot more reasons to be bullish heading into this long weekend. We have Good Friday on Friday, so that means the market's going to be closed and it's going to be a longer weekend. Generally, heading into long weekends, the market tends to be a bit more bullish. So if the VIX does capitulate and fall down lower, we're sitting at a level of support here. This is like the only real factor that the market really has for it to not bounce. So we could take a look at the large tech stocks as well. Google, obviously we had a rip to the upside to 164, but we're holding 157. Tesla, it's creating a bit of a bull flag here at the level of support at the bottom here. Apple is also trying to basically hold support. NVIDIA had a nice move to the upside. AMD also had a basically green day alongside NVIDIA. Microsoft, still not terrible, holding this level of support here. Amazon didn't do too hot because Amazon is also very, very heavily influenced by the IWM. So that's something that you have to take into consideration as well. Netflix and Meta. Obviously, Netflix had a very, very good day. And then Meta, not so much. So you can see that Meta is one of the biggest losers. So Meta has dropped from the highs to the lows. It dropped almost 35%. Currently, it's still down about 30%. Now, on Meta, we're getting pretty close to levels of support. 508, the 490 area. These are very important levels of support on Meta. My point is that money is going to transfer outside of the complete winners, right? And if one of these stocks is taking a bit of a hit, right, it's a good sign that these other stocks are showing strength, because Meta has been one of the biggest winners. And now Meta is at a level of support. Is this essentially when you want to start becoming extremely bearish on Meta? Probably not, right? So because it's not a great time to become extremely bearish on Meta, because these other large tech stocks are starting to try to show some sort of a bottoming signal, and because we're getting the long weekend soon, right? All of these different factors are essentially telling me it makes more sense. I'm not as convinced. I would say 70-30. 70% bullish, 30% bearish, maybe 65-35. But it makes more sense to be a bit more bullish. But then once May comes, sell in May and go away. That's going to be really, really interesting, especially in today's market environment. And one of the other interesting things that occurred today was earlier in the day, around 11 a.m. Eastern time, Trump announced basically the news between Europe and America. Europe essentially said that there were not very good talks for the tariffs. And the tariffs didn't look like they were going to make any headway in Europe. So the market really, really dropped intraday. And then we got a slow grind up into new highs. And then, of course, towards the end of the day, we dropped back again. But my point is that in today's market environment with these tariffs, not only are we going to be completely at the whim of these tariff news, so it's important to, if you're getting into any swings, hold them for a bit further out. But the other thing is that these technicals are still very, very relevant. These technical indicators, the momentum that we get in the market as well, are very, very relevant, and they still apply. You are going to see news occur and show in certain aspects according to when certain technical setups should occur. And that is something that I think could continue. And the main truly bullish things that are going on right now is that the Russell reclaimed this downtrend level. The large tech stocks are not all looking great, but they're trying to show some sort of bullish structure. They're showing a bit of bullish structure. But in general, I'm not as convinced to the bullish side, but just in general, maybe we might get a pullback tomorrow. But heading into Wednesday's close into Thursday, just essentially heading into that long weekend, you got to be a bit more bullish. So that's essentially what I'm looking for. That's what I'm looking towards. And it's a good sign that these large tech stocks are starting to bottom themselves out as well. Bitcoin and gold are also a bit still doing well, which is a really good sign as well for the overall market. And the Chinese stocks are also bouncing a bit. So you see the Chinese market is bouncing. Baba also is bouncing. Baidu, JD, they're also doing well. They're bouncing. So in general, it's a good sign. The only thing that is a bit more worrisome is the VIX holding this 27, 28. And some of the large tech stocks showing some weakness at the tops. But again, NVIDIA, Tesla bottoming itself out. These other stocks doing well. It's sort of a toss-up. That's why in this middle area, you got to play it cool. You can't force anything. You got to be patient. You got to let things flow the way that they're going to flow. Not show too much aggression towards either direction and let the market come to you. That's essentially it. So I hope you guys enjoyed today's video. Please make sure to like, comment, subscribe, do all that good stuff. And I will see you guys bright and early tomorrow morning. Thank you. Take care.